So Martin, let's dimension the GDP figure as you said.
Yeah.
Not forgetting last year, we're coming off a really good and very high base. Manufacturing was at a record high. I think we might have reached peak capacity there. Okay. But quarter on quarter, the services sector actually did pretty well in that figure you just dimensioned. Okay. So yes, manufacturing has peaked, but coming off a pretty high base year on year, quarter on quarter, you're seeing a shift from manufacturing into services. So for the consumer, you asked about trade wars. Trade wars are never good for confidence, not for consumer confidence, not for business confidence, not for the market confidence. And Singapore being a open trade economy driven by openness and trade, this can't bid well for our consumer confidence or business confidence. Yes. So looking forward to the forward GDP growth numbers, if this escalates or doesn't get resolved, don't be surprised to see a further worsening as businesses may delay their investment plans, right? So indeed. I think uncertainty is never good for markets. You're going to see more volatility. It's not good for confidence. But having said that, you know, the jobs numbers are still pretty good. The intra-regional trade, is not bad. Any escalation of trade tensions between China and the US will necessitate China doing what it has to do in terms of technological advancements, improvements in AI, etc.
You've got very interesting views on that. We'll get to that in just a bit. But just very quickly, one of the direct consequences, of course, is potentially prices for a lot of things could rise, including for services and certainly for goods as well. Do you feel that the bank right now is in a position, does it have pricing power specifically with regards to the property sector? Because in addition to these trade fears, we also had the government here just a couple of weeks ago turning down the screws even harder, making it even more expensive to buy property now.
So the interest rate trend in Singapore has always lagged behind the global or US rates. The US rates have edged up faster and quicker than in Singapore. And I think, we've had 9 different rounds of macroprudential policies on the housing sector here. Yeah. It is already fairly stringent in terms of the rules we have to follow to get a housing mortgage, be it your first or your second. No doubt what came out last week was a surprise for the market, certainly a surprise for people who are looking to buy their first or second homes. But let's not forget that Singapore has 2 housing markets. One is the public sector and one is the private sector. The public sector still has fairly affordable housing, so there is no excuse for any young family or any young couple who needs to buy a house
to be denied.
They will not be denied, and I think that serves a great social purpose and an income distribution purpose, and I think that's a great policy that we should continue. For the private sector, yes, it will get affected. No doubt someone who's thinking about investing in a second property, a foreigner coming in, looking at luxury property, might rethink that.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.